This is NDTV, and you're watching NDTV Profit.
NDTV Profit and Reliance Money partner together to go across India to answer all your financial needs, to help you build your investment spectrum from equities to mutual funds and from gold to insurance and more. Today we go across to the ITC Infotech Campus in Bangalore for a special forum. ITC Infotech is a robust emerging player in the sphere of IT services. Formed in 2000, ITC Infotech's lineage goes back way before the IT industry began. While an enterprise range of technology capabilities and world-class quality processes form the foundation of ITC Infotech's IT service strength, a sharp domain focus ensures that IT delivery always places business needs ahead of technology. Spread across approximately 35 acres, the ITC Infotech Park campus in Bangalore is a visual delight because of its lush greenery and vast expanse. Unlike any other IT company where glass and steel rules the day, ITC Infotech is surrounded by natural vegetation engulfing the campus in a green belt. We visit ITC Infotech today to answer the financial queries of their employees.
Hello and welcome. Our Money, this unique corporate investor series, comes to you from the vibrant and lush green campus of ITC Infotech here in Bangalore. Joining me, as always, is the CEO of Reliance Money, Sudeep Bandyopadhyay, and today's special guest is Mr. N.K. Garg, who is the CEO at Sahara Mutual Fund. And of course, the entire discussion is going to be about questions and answers from this audience gathered here. But let me first start with the mood, Sudeep. At a time like this where, the sentiment is being compared to probably shopping in malls, everything's on sale, yet no one is buying. Is the problem in the quality of goods on sale?
No, Namrata, I think it's slightly different. If you really look at it around us, across the world, there is a crisis, and this crisis is real. It's not a perceived crisis. What's happening is this is, making people completely risk-averse, and they are trying to fly to safety. They are very, very worried about return of capital rather than return on capital. And I think it's completely understandable. So they are very worried. They are not willing to take any risk. Having said that, I think probably if somebody is willing to take some risk, this is a great time to build their wealth. And you're absolutely right. Lots and lots of shares and lots of other assets are available at significant discount to their market prices, significant discount to their book value, and some cases even a discount to the cash available in the balance sheet. So it's definitely worth looking at picking up the right assets, maybe shares, maybe property at this point of time for long term.
Mr. Garg, would you agree with that? Are you also going value hunting in these distressed times? And you, I believe, have 3 new funds geared up for a launch as well.
No, in fact, we see a lot of opportunities in this time. Unfortunately, in the last 3 years, investors has taken this as a long term. Was the 15 days time was the long term. So we have to come out of that mindset and see that definitely it is not that corporate performance has settled. It is still maybe a couple of months or maybe 3-4 months away. But equity market always preempt that move. So if that corporate performance is going to start improving from, let us say, May, June, I think the stock market should start taking the cues and start really accumulating on that. We see huge opportunity, as Sudeep also mentioned, huge lot of companies, very good companies. Virtually, there is a discount sale on the equity market today. So one can really pick and choose and stay invested. The important thing is that it has to be a time frame. It is not that next few months, then there could be anything. The fluctuations are much. Our stock market fluctuation, daily fluctuation is about 3.5%, which is very high. It has to settle down. So it is like a buying and hold strategy which will really work in this market.
Sudeep, the other questions a lot of retail investors have is when they look at real economic data and they feel the stock markets might, directly come to terms with that. For example, the GDP data today at 5.3%. Many would believe that stock markets from a retail investor point will react to that. the smart investors and fund managers would believe markets have already discounted that in place. How would you describe that to a retail investor? What should a retail investor look for while making a decision on the equity market performance?
Capital market has already discounted this third quarter growth numbers which have just now come out. Everybody knows that third quarter was probably the worst quarter in a long time, and they are fully factored in the numbers. Let's look at what is the GDP total annual we are talking about. The government is still talking about 7%. Maybe we may not get 7% growth, we may get 6%, 6.5%. You add to that the average inflation, which I think will be around 4.5%. You're still looking at a nominal growth of 10, 11%. 10-11% average nominal growth will translate into about 15% growth for good corporates. If you're picking up good corporates, you will definitely achieve 15% growth. So I don't think stock market is a bad place if your time horizon is long. But you have to be very clear, as Mr. Garg said, that you cannot be a operator in the market and hope to make money, because it's extremely volatile market now, and it's going to remain like that for the next 6 months. India is unique in that respect because we are going to have elections, which traditionally over decades we have seen election year, election months, there is a huge volatility in the market. So that's not going to go away. So that's there. World economic crisis is not going to go away. So these two factors definitely will make market choppy in the short term. But if you're looking at a long-term horizon, 3-year, 5-year, I think it's a great time and great place to build wealth.
So will investment decisions change with the new government in place? Because, most likely it's going to be a coalition. Will your investment decision change with a different variety of coalition?
To a great extent, I don't think much will change. Neither my investment decision will change, nor the government policies will change. If you really step back and look at what was happening pre-2004, when the BJP-led coalition was in power, and what has been happening in the last 4 years, I don't think there was a major shift in policy on any single important economic matter. I think broadly the policies being followed by consecutive governments have been very consistent, and I don't see any reason that changing. It will remain. Compulsions, economic compulsions are the same. Why our country? Look at the world as a whole today. I think pretty much same economic policies are being followed across the world today. And I don't think any sensible government has any choice. They don't have any option. They have to continue following the principles and the policies which the existing government is following.
Mr. Garg, let me come to that, in fact, the global linkage in US in tackling this problem, because the problem has come from it. So the problem should be resolved also from the US side. Do you believe the policies so far mentioned are going to solve the problem in the near term?
No, I think my view is slightly different than whatever is happening in the marketplace. Although this new administration is taking a lot of pains to really sort out the problems, but I think still they are not hitting the root cause of the problem. Root cause is somewhere lying in the properties. So unless they take actions, possibly it could be a golden opportunity for US government to really go out and buy those excess inventory, housing inventory on their books. That can solve the problem much more effectively beside what they are doing. So possibly that root cause of the problem need to be tackled. So I think the packages which they are coming, the stimulus packages, the various tax breaks and all that, those are reasonably good measures. But still they have to hit that nail on the root cause of the problem.
So in terms of the policy tools adopted here, a mix of fiscal stimulus packages, rate cuts, many would believe that RBI was quite nimble-footed to come in and tackle the problem, came down drastically from very high interest rates to pretty much going lower as we speak. Do you feel that the policy response has been adequate?
Oh, I think, Namrata, I am one of the votaries that policy response has been fabulous this time. I don't think we have ever seen this kind of policy response from any Indian government in the past. They have been taking continuous action. RBI has been at the forefront initially. Subsequent to that, the government came, and last 3 months we had 3 major fiscal packages announced. They have done very well on the policy and the package announcements. Yes, there is a whole lot of things which needs to be done on ground. Implementation of fiscal policies is very, very critical. Yes, we are seeing some of it already on ground, but a whole lot of things needs to be done still. As far as RBI is concerned, initially they have done a lot of things which were right, But I think now the market is waiting for their further action.